Well, another demonstration today that futures traders are not psychics. Yesterday, the futures market was predicting an even bigger fall in Shanghai today than yesterday. And while it started off looking pretty dire, the index recovered through the day, and sighs of relief echoed through the corridors of government and the central bank, since so much political and monetary capital had been invested in propping the market up there. A fall of a bit more than 1% on the day was a win, although there was a bit of slippage towards the end in Shanghai. Traders in Europe and the US were spooked by what happened in China and did some selling, but there was a big rise in Hong Kong today. Now here's something that shows yet again that you can prove anything with a graph, depending on when you start it. This one shows the MSCI World Share Index and the Shanghai Composite over the past 5 years. And on that time frame, the Chinese market is running behind the world average, having done a big catch-up, overshoot, and then correction over the final year of the 5. It was a bubble, of course, but this is just another way of looking at it. In Australia today, it was a fall of just a few points, mainly because BHP and Westpac went down. Among the risers was CSL, which continues to march towards the $100 mark, and Woodside, which rose quite strongly, even though the oil price fell last night, especially the price of Brent crude, down 3%. Elsewhere in commodity markets, gold and copper fell, while iron ore rose, and the Australian dollar managed to scramble back above 73 US cents today. And by the way, on the subject of futures markets and psychics, ours is now fully predicting another rate cut by April next year. A month ago, the odds were 50%. And that's finance.